What's up, guys? Welcome back to another episode of Raw Stocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price ended on Friday and where price is likely to head into the rest of the week. We got our weekly chart pulled up, but before we get going, don't forget to check out the links in the description below. There's links to the Raw Stocks trading community on Discord. It's free to join. If you want to upgrade to premium and you want to get the options, call outs, we often trade Tesla, SPY, QQQ, NVIDIA, along with some others sometimes. If you want to get those premium call signals, then join. There's a link to upgrade. Currently, we have a 25% off promo code going on, making that upgrade only $20 a month. Typically, we get at least one trade a week that's going to cover that entire month's worth of premium. But without further ado, let's go ahead and jump into the charts. Again, we got the weekly chart up. And on the weekly chart, a couple things we want to notice is we had a nice bullish week last week after earnings. Take a look at that as we jump to some of the lower time frames. But what I want to note is that we did not close above the breakdown candle low or high of the week before. And so although we ran a test of it and we got above it at one point, we closed below the opening price of the week before. Now, why is that important? The reason that's important is that we just still haven't confirmed that we are, in a new bullish trend. If you kind of connect just the weekly highs there, you can see we pushed up on the most recent resistance level. We did not even get to the resistance level. If we take a look at the 20 period weekly moving average, we're below the 20 period weekly moving average for a simple moving average. We do have RSI started to point up, but you can also see that we have not seen RSI bottom all the way. Back here in January 2023, we did see a lower RSI reading. We did not get back to that yet. Doesn't mean that we won't go lower or higher. Just means that right now RSI is pointing upwards. We did see a nice bullish week, but there's still some things going on that have not confirmed that we're in a full new bullish move yet. So we'll be waiting to see if that happens this week, right? And if that happens, what we're going to look for is first we're going to look out for that breakout above the resistance on the weekly. We're going to look for the week to close above that resistance line. If the week closes above that resistance line and above the opening price of last week, then we can look to attack further buy side liquidity to the upside, being 20 period moving average, being the order block up here above, and we can put a horizontal level there as well to signify where that order block is. So we could look to push up into that, and then we could look to push up as high as 223 up towards the 50 period moving average on the weekly chart. Okay, because you can see if we look here, we get above, now we're below, now we can make a run and get above, and we still could see a lower low, even if we get above that 50. So it doesn't necessarily mean anything yet. Right now, you can also see, if you look at that fair value gap, you can see we've drawn down into that liquidity and held inside that weekly fair value gap. That's a pretty good sign. We ran out the liquidity here. We may not make a run to the lower low, right? This may be all she wrote. This is let's take a look at the Fibonacci levels here. As far as retracement goes, you can see we've retraced past the optimal trade entry level at 162, but we failed to close that fair value gap entirely, and we failed to deliver on a new low. So it's highly likely that we do cycle back up, even if we decide to make a crack at that 104.56 or whatever that ultimately that low is. We can give a more precise 102. Right? Even if we decide to take a crack at that, we're going to need to pop back up to get momentum to get down there. So right now it is starting to look like we pop up. Now we can also, use some trend lines here. If we looked at right here, right? And we also took a little bit more aggressive trend line there. Right, you can see we kind of have a falling wedge type of pattern. So if we do trade down, right, we're going to come down kind of to that apex of that falling wedge. It's going to make a decision to either dump entirely or it's going to break out of that. But we're not necessarily looking at that one right now. I'm going to be looking at this this resistance line more than the support level, right? Because we have some horizontal levels here that will act as support. We could also use the weekly right there candle, the low of last week as a level as well. So if we start breaking down, we're going to break down below some of those levels first. So I'm not so concerned about the support, the support trend line. Also, we broke below that long-term support trend line last week, and then we rallied hard above it after earnings. So again, we'll be watching for those specific things that I just talked about going into next week. We do have FOMC, Fed rate decision. We do have some jobs numbers, have some other things on the map as far as economic calendar goes. So make sure that you're checking your economic calendar for the days that market moves are more likely to happen. Big moves, right? On the Discord, we got the economic calendar posted. So if you remember, easy to find there as well. Let's drop down into the daily chart. In the daily chart, you can see we had earnings, right? We had that giant gap for earnings. Leaves a fair value gap in here and just a volume imbalance of price not trading back into that level. You can see also on the daily chart, we got above the 20 period. We kind of ran a test. We didn't come back down. The 20 period is starting to flatten out. Right here, we also see that same trend line from the weekly chart on the daily chart. And you can see we haven't got above it. We can make it a little bit more precise when it comes to being down here on the daily chart. And you can see we ran a test on that support level. So if we're likely to reject, right, we've pushed up on the daily 50 above the 20. So we're kind of stuck between those. We're looking for price to either pop up above the 50 and get that 20 period to start to curl up, which is going to drive us higher. That potentially can drive us up into this daily bearish fair value gap, right? Get price to drive higher. If we reject that 50 and that's all she wrote, we're going to come back down and we're probably going to try to fill this gap. So again, watching for that to happen. We did see RSI, kind of bottom out on two separate occasions here. We have seen a bearish break of structure. We have not seen a bullish change of character yet. So we do still have to anticipate that there's a possibility that we can come down unless we break above these old highs. If we break above those old highs, we'll see a bullish change of character, a market structure shift on the daily chart. At that point in time, we might cycle back down still, to potentially down here to maybe a low, and then see if that holds the support. Using smart money concepts, what I want to look at is where this bearish break of structure occurs. And we're going to look at that breaker block specifically. Okay, and we went over this in the live room today on the book study. We were talking about different kinds of blocks. You can see we've traded into that breaker block. Okay, it was a bearish breaker block as we came down through it. Now, if this gets invalidated, right? If this gets invalidated and we push up above, we certainly could come back down into it and test it as it turns into a mitigation block and potentially drives price higher. So this is kind of the level I'm looking at right here is like 160. I'd like to see 160 hold a support. That does also in line with like the 20 period kind of maybe coming down just a little bit or flattening out right around that 160, anywhere from 165 to 160. I want to see that hold the support if we're going to make any kind of move back up to 185 to 198.79 in that bearish fair value gap, or ultimately even back up this high at 205. So if we want to make that move, we really want to see 160 hold. And this is on the daily chart, so we want to see daily candle closes above that 160 to 165 range. If we start closing daily candles below 160, right, it's likely that we're going to run down to 147.76 or somewhere in between, and we're going to fill that gap or partially fill that gap before we make the next move up. Right. And then there's also the possibility that we just entirely drop down, but I don't see a catalyst for that. But entirely drop down and swipe the lows down here. I just don't see that happening. I see that we spent a lot of time up here in the 184 to 160 range, and I do anticipate we're going to have a hard time breaking out through that to go, much higher. But I do see that maybe there's a chance we consolidate in that same range. A couple other things you want to have on your chart is you want to have the order block here. Right? That's the bullish order block before the move up. We want to have that on our chart. And then we also want to have the rejection block here off of the old high. It can also be considered an internal swing order block. You can see that when we try to push up, we rejected, we came back down, we set this order block. Now we're pushing up, right? So a move up, again, this is around the 50 period, but a move up on the daily chart could find us rejecting at 177.40, all the way up to 184.21. And the mean threshold, or the consequent encroachment of that order block, is going to come in at 180.81. So even if we see an early push up next week and we can't get through that, we're likely to see some kind of reaction. Now, we already saw the reaction as we pushed up towards it on the first attempt, right before we fell out. So the next attempt is going to probably see us draw into it deeper than just the low boundary of 177.57. So again, if we push up to that, still finding rejection, I expect that we push a little bit deeper into that, potentially forming a double top or something like that, if we're not going to break through it. But I also think that once we get up there, we might push back down a little bit, and then on the next attempt break through it, again heading up to this fair value gap that we know liquidity sits in, as well as buy side liquidity back up in these old highs. So if we drop into the 1 hour chart, in the 1 hour chart, you can see, we'll blow it up a little bit. We got our daily targets that we talked about. You can see on the 1 hour chart, we have a large fair value gap that we have not traded back to. We saw us top out here. This trend line right here is that resistance line we were just talking about on the daily and the weekly chart. You can see we traded right up to it. We rejected it. We came back down. We set a lower high. Right now we're below the 20 period. If we don't see price gap up into these order blocks above here, 178, 180, opening on Monday, we could see price roll back over and come back and test this 1 hour fair value gap between 155 and 145, and that comes from earnings. But we can also look at, all of these kind of consolidated wick lows, say 158 also could come down, swipe the liquidity, right, and then pop back up from there. So we will be watching again to see if we gap open, if we gap down for open Monday, if we gap up for open Monday, and then, if that happens, where are we likely to go? If we look like we're heading down again, maybe this fair value gap on the 1 hour chart at 155.51, or again, if we find that that 160 level being held on the daily time frame, that's that breaker block that we're looking again to hold support on. We drop into the 15-minute chart, and the 15-minute chart was just a better look at what happened. I'm going to take off this order block for now. But if we look at the 15-minute chart from the price action on Friday, right, that's here on the 26th, you can see we make that push down. We get a bearish change of character here. We pop back up, right? We set that lower high. If we look at what the Fibonacci levels are there, you can see that's an optimal trade entry, right? We pop down, we pop back up, we get the optimal trade entry. We trade back down to the previous low. That's your low hanging fruit trade. And we could look for price to come back down to the symmetrical swing down at 160, right? That's in correlation with and confluence with some of the other things that we're looking for. We also have a 15-minute fair value gap right around that 160. That's also where that, if we go back to that breaker block that we're looking to mitigate price, right? That's also that same area right down here at 160. So a lot of reason for us to come down there and hold. We also just right below it at 158.63 have a 15-minute order block. Now we've already traded down to that order block and it held. So I do think that we're going to hold up here at 160 unless the objective is to just go much lower. I think that if we come down to this 160 again, and I'm probably looking for like 161, maybe even holding 165. I will be looking to take long entries between 165 and 160. I'm not going to go into the short time frame charts on today, just because it's a weekend update. We're really looking out to the next week to see where price is going. But it's been a nice rally up for Tesla. I hope for the bulls that Tesla's able to hold and we're able to get some relief. I know that things start to look scary for people as Tesla was just falling so rapidly. But, now here we are pushing back up. Looks like 200 could be, a target on a higher time frame. And so hopefully we get some relief for a little bit before Tesla makes a decision to go lower or higher. So look forward to seeing you guys in the trading room. Good luck tomorrow, and we'll see you on the next one.